Good morning, everybody. Today is February 25th, 26. Let's make some money today. What are we talking about? Not trading the top step account today. I took a payout on it, 1,800. Something beautiful, man. So just without the risk of blowing the account, obviously, I want to just trade a different account since I already got paid out. Take a break from it. So I'm actually going to try lucid trading today. They're running great deals. But yeah, here. Proof as always. Proof in the pudding. Payouts. Pending, 1770. They took $30 in fees, assholes. But yeah, funding approved. Just waiting for the risk analysis and get top step ready. But yeah, running lucid trading today. They had what's it called? I have a Lucid Flex 50K eval. Great. I mean, first two account deal, you get a 60K, pretty much top step account. Same 2 trading days, 50% consistency target. No consistency in the funding, which I, as a trader, love because I hate consistency rules now. When you first start trading, you need consistency rules because you need to be able to stay consistent as a trader. But for me, I'm chasing larger amounts, so that means I'm going to be risking a little bit more, right? So if I risk $1,000 for the day, I need the ability to make 1,000 back the next day, not just be limited to like $600 because then it'll take me 2 days. As a beginner trader, right? You want to be risking low and still hitting those targets, and then just collect green every single day, right? For me, I don't need to be green every single day. I just need to make money, right? Like last week, first 2 days I made about $3,000, Monday and Tuesday, and then the rest of the week obviously didn't go as well. We lost about two grand, right? We're still up, a couple $100 on the week, and then this week, Monday and Tuesday, I made that money back, and I was able to take a payout on it, right? But I need the ability to make $1,500 in a single day and take advantage of the opportunities when the market moves 300, 400 points, right? Am I risking a lot on those days? No, I actually risk less on those days because their moves are so well defined and they're so expansive that I don't need to risk 10 micros for 200 points. I need to risk maybe three micro contracts, right? And that's still what for 200 points. That's about $1,200, right? And I'd be catching 100 point, 200 point moves a day. So it's called the Lucid Flex 50K eval. $65. No activation fee too. 0 activation fee on your first 2 accounts. That is a great deal. I'm not using Trade I fucking hate using Trade and what's it called? What is this thing called right here? Trading View? Yeah, Trading. I don't know why I'm blanking out. Trading View, Trade hate it. Extremely delayed. You get very late fills. You can't really, see the distance or the actual risk that you're putting on a trade. Right? You would have to calculate it. I don't want to do the math. Right? I'm here to trade, not to calculate for 5 minutes what my stop is based off of points and how many micros I'm adding in and where I need it. I'd rather have that, be done for me. So, When the song is playing, you know the market's about to open on Bloomberg. But yeah, they got this new thing called Tradesy AI. Yeah, and also I trade on the lower time frames. I trade on the 30-second time frame, which a lot of people think that'd be insane. But you have to pay for it on TradingView. It's like, no thanks, I'm good. I'm not gonna drop $60 a month when there's platforms that already include it in your trading evaluation. Pre-market plan, probably bullish for the day. Chase targets up above, maybe 25,300 current year mid at those previous highs. Nvidia's releasing earnings today. Looks like it already gapped up. Everything is gapping up. Whole market, even Bitcoin's up. That's surprising. Up 4%. Ethereum's up 6%. I saw the VIX was down, but yeah, I mean, we're just gonna take it easy today on the eval. I'm not gonna risk a whole bunch of money. I want to take this thing slow. I want to keep buying evals. I mean, if you're a beginner trader, I hope you're doing that too. You're not just rushing through your evals, try to pass them in a single day. Take a week if you need, right? Don't take a whole month to try to pass an eval, because then you're just limiting yourself from getting paid, right? Once you're more advanced, you could try to crank out it in 2 days. That's what I usually try to do. I'll risk a little bit heavier. Sometimes I blow it. Other times I pass it, right? It's usually a 50-50 chance. All right, market opens. Let's see. Got an expansion move to 200. See if there was any demand to go long. You got 300. You still got 25.75. Could be a move. 25.50, 2,500. All got contracts sitting there. Let's see what happens at 25.250. They're going to try to get filled at 25.209. Could have caught the pump on open, but it's okay. I'm not interested in that. Let's see, we're already rejecting off. Where do we get up to? 232. What? Oh. What the fuck? It's weird. Yeah, look at that. I'm already rejecting off of 30s. I think because there's such a big expansion move earlier. Oh, never mind. It was just a pure absorption. Absorption. 300 could be the target. CBD's up to 2,000. Yeah. The auction's pretty thin right now. There's not really any directional correlation of where buyers and sellers are. It's pretty even. Now we got a lot of buyers here in the 20s. Big seller with the 30 lot, 176. 17 contracts. Interesting. Yep.
The top 7 members are still 40% of the S&P, and they're not, except for Microsoft, which has done poorly year to date for a variety of different reasons. They're not suffering the same way that software as a sector is suffering. They're not suffering as badly. So you've got some great.
There's an hour of sellers in the 30s. I'm gonna try right here. Just a second. I'm waiting for this reaction from this candle. And we are completely overbought in this scenario.
Components of the S&P have actually been doing okay, not fantastically, but okay, which keeps the index.
This could be a ranging market today. Yeah, we got a lot of pressure in the low 20s. Just hate because you could get this bounce off in New York VWAP pretty easily. From what I see in the auction, it's just an extreme amount of sellers trying to hold down those buyers up in the high 30s, but the low 30s and the mid 20s are completely, completely sellers. Just full of selling pressure. I think we're still going to get to 250 first. That CVD is slowing down a little bit. I'm going to try it right here.
And every time people start to look and play with the tools themselves and they think, wow, this could be X for my business, this could be this, you start to get this, I don't know where it's going to take us, I don't know where we're going to end up, and big technological changes like this are hard to gain out.
Stops at 260. Targets could be probably overnight VWAP.
This is a massive change in many ways, but at the same time, it's a refinement of things we've already been doing. So it's really difficult to game that out with any kind of certainty, and then you just layer on a bunch of geopolitical questions on there, and it's hard.
What do you do in the meantime then? Because you can't game this out. We can't know what this will look like. I doubt we'll have any answer to what AI is going to do for us by the end of this year. So what do you do in the meantime when you see these massive sell-offs in corners of the market?
Yeah, it's all aggressive sellers. Let's see.
OpenAI and Anthropic use Workday software. So clearly, but see, that's one of the possible outcomes, that software survives.
Get the low 30s getting hammered with buyers.
And I think that is like, if there's the circularness of both using
might take a loss on this one. Might be a little bit too early, but it's fine. I might taking a small loss on this. I like the trade idea. Look at that. Yeah, look at that selling volume. They're really trying to push this thing down.
So looking at those and going, okay, where do I really think that there is some proprietary stuff here? And for a lot of companies, it's data. Proprietary data is not, if it's not free on the internet, some of those tools can't use it to the same degree.
See what happened in the 50s. We haven't even reached the 50s yet. The 40s is filled with sellers. You can see that's a large amount of sellers that stepped in the 40s. 180, 38. 184 filled, 85.
Still in beta, but I've been using it a lot as well on the terminal. Tells me that although the Dow was up 15% last year,
I'm gonna enter in for 2 more.
the DAX beat us 22%. The FTSE was up 24%. The Chinese Shanghai Composite.
I think that big lie is gonna hold it down.
Was up 31%, as was
Look at that. Yeah, that's all sellers getting hammered.
Brazil was up 35%. The Hong Kong HSI was up 35%. The South Korean Kospi index was up 79%. So it's not the best performing benchmark in the world, right? When President Trump says this is the hottest market in the world, maybe he's talking about some other measures like foreign direct investment or,
back in the low 20s. Can we shoot? Can we shoot under?
So we also look internationally, and I think you have to. If you go back and take a look.
Man, there's zero volatility today.
The world indices as a whole, it's just turned up recently, but it's a long decline down, right? So it's a time frame issue as well. The U.S. markets had been outperforming most other markets. The dollar got a lot weaker last year. That also helped other markets outperform. And there was this move of everything is overvalued in the U.S. or a feeling of, wow, we're really hitting peak valuations or stretched valuations. Where can we look where things don't look so expensive? So it's a relative thing, but the time frame matters a lot. International has underperformed for periods of time, for long periods of time. If it started to outperform, it could outperform for some time. I mean, like, there is a balance there.
Well, but his point is that the changes that he's made have made this the hottest country and the hottest economy in the world. What he's done in his second term has been the most drastic economic turnaround this country's seen in history.
We got a pump. We got a pump to 50. How many orders there are at 50? Holy shit.
I think that right now with the U.S. markets and the AI, I would argue that that's been a huge U.S. markets for the last 70 years. It's not only one thing. It's not surprising to me that people like to take credit for things because that's what they do.
Another rejection. All right. Popping in for 2 more. We're a total of 6 contracts. Can we break those lows finally?
Before it took up 100% of everybody's cash flow, CapEx was the greatest thing in the world. Now that people are borrowing money to spend it, so there's a lot of things that are going on. So I don't want to pinpoint down to one thing in any way.
Yeah, narratives are trimming on a dime, it feels. Sarah, thank you so much for joining us this morning. Sarah Hunt of Alpine Saxon.
Oh, this looks kind of like yesterday. Can get into the 50s. 55. Yep. All right. Stopped out for 363. Should have just taken the easy longs. I don't know what I was thinking. It's a lot of chop, though. It looked really good until it didn't. It's just how it is. And then we jumped up 100 points anyways.
Slowdown in housing, it's a problem for us, so it hurts the entire sector. If you look at the sector look, every single sector except one is gaining, and that is consumer staples. If things haven't changed, oh, now I am wrong. It was just consumer staples close. It was close. Energy joins the pack too. Consumer staples, so by the way, I did a dive into this because I was thinking, why is consumer staples doing poorly? Diageo in Europe had pretty bad earnings, so all of the brewers like Morrison Coles, Constellation, all of those are falling today. And I was also looking in the staples.
This might be the move. Yep.
But Estee Lauder is
yep.
a staple. Look, I wear makeup as much as the next woman, but is that a staple? I don't know how makeup is a staple, but anyway, there's your fun fact of the day.
It sounds discresh.
It does sound discresh.
Actually, I'm not gonna hop in yet.
What will it take for NVIDIA earnings to impress investors? We ask our head.
I don't like that 4-layer stack of orders to the upside. Man, something's fucking. I got a lot of hedging going on. Those sellers selling icebergs. Let's see. I'm gonna retry this right here. Stops at 70.
Oh, welcome back.
And while we cannot remind you not to go back,
Wow, what a swing.
This is cashmere. So
LinkedIn can help you hire right.
Man, I'm just getting wrecked. Wow. Okay. I'm down 500 now on this eval. All right. I gotta take it easy. I'm not gonna blow this eval in one try. 300's got 80 orders on it. And 2550 is getting stacked up.
that means a great deal to me. To us, I feel a certain
Should I have taken a buy on this?
a calendar year later. Come on,
I mean, I just didn't see it, man. It's just so consolidated. Should have never traded in the consolidated part of this market. And then it rejects 70s. Like, what? I mean, this clearly wants to go down. I think because CVD is just so high. That's usually the common theory is when the CVD is extremely positive, it's so hard for the market to go down. I mean, that's just a repeated pattern I've seen. And the CVD is not slowing down either. So we might just see a super slow market today. We'll see what happens at 300.
World's most powerful investors don't ring a bell. Quietly reshape entire industries. This is the money shaping the world. The dealmaker playbook for power, millions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with Finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every Wednesday.
There's that pump to 300. I did call it out. We're at current year mid. Sure went long. I sure went long. I hate that. I hate when I fight the trend. 400 got 96 contracts now. And yep, CVD's up to almost 4,000. I hate those days, man. Okay.
I love the Workday story. I just can't get over it.
I'm surprised that it's not rallying off the back of that, though. That feels like something everyone would get jazzed about.
If you're worried that people are going to use Anthropic to eliminate your need to pay for Workday software,
Right.
it means to you that Anthropic uses Workday software.
Oh, this thing might go up to 400.
Right.
All of them could just make up a clone.
Might go up to 400.
Maybe they will at some point. I don't know.
Good point. All right, we'll be discussing that, I think, for a few days at least. Shares of Kava rising after reported fourth quarter sales growth and
Not loving this. Not loving this.
expectations for a slowdown. Joining us now is Bloomberg's Red Brown. All right, so
Yeah, now looking at it, it was easy longs. It's just sometimes it's so like crowded, red that it's like, wait, are we going up still? There's hedging going on. Everything's still shooting upwards. That could have been 100 points easy. It's brutal. It's just one of those days. Just shooting upwards. Shooting upwards.
not push the envelope too far. Is that what Sweet Green did? They just expanded too much? Well, what is the difference in that strategy?
Yeah, you could make an argument that Sweet Green maybe expanded a little bit too quickly, right? You have to kind of think about like how big is the market for a $20 salad, right? Like there is clearly a market for it. People do want that. There are people that are very health conscious. They like the messaging of Sweet Green. We like that the food is coming from these places that we can.
Kava Group Inc. up 20%. Wow. Someone made it back.
All right, Red, great to have you on the food stocks, and it's always a fascinating discussion. We're going to get to AI now. Red Brown there covers the restaurants.
Will AI disrupt Kava?
Yeah, it's unlikely, right?
Oh yeah, looking at the 1 minute chart. Yeah, that's all green candles. Just one pullback candle. That's crazy. We're still shooting upwards too. We tried to take the 5 lot, 400.
In any case, AI has been disrupting a lot of things, and but not NVIDIA, not the demand story for NVIDIA's chips. We're going to talk about what it will take for the earnings to impress investors next week.
All right. Fuck it. We'll buy. Now we fall? Really?
There are lots of experts out there who might know tax strategy, or maybe agentic AI, but they don't know you.
Look at all those. Okay. Yeah. Oh, wow. Wow. Okay. Yep. Yep. Today is not my day. Not my day today. We're not really holding 20s, are we? No, there's so many buyers at 20 is what I'm talking about. Don't tell me we're overbought in these conditions right now. I enter in and we're immediately overbought.
You can't control the course or the competition.
Wow. Wow.
Control what you do next. Tiger Woods built his career on the ability to reset, adapt, and make the next shot count. Insperity is built to help businesses do the same. You deserve an HR partner that's there to help you thrive, no matter what comes your way.
There we go.
Because how you HR matters. Only on Bloomberg.
Nice. $400 is the intended target. I'm in 15 micros. What is going on?
So the mover here is really NVIDIA, and wow, for the first time in my entire life, it's not in this panel. Shaker, what have you done?
It's still in there.
Ah, there it is. Whirlpool's up there. NVIDIA, it's only NVIDIA, is up 1.3%.
Really? Oh my goodness.
Here, which is far more important right now, is gaining 0.2.
Wow.
Wow. Diageo is down 15%. You were pointing that out earlier, which is a
I step in on the first pullback. That's crazy. Let's see. 30s filled with buyers. I don't see any real selling activity. CVD is stable at 4.7. It's falling below 4.7 now. Okay. Yep. This looks like a reversal. This looks like a reversal.
That is for sure. Let's talk about the big one on the board. It's NVIDIA.
Yup. Yeah. First reversal, I hop in long, dude. Every other time I hop in for shorts, it always just completely keeps on shooting up. That kind of sucks. It sucks. Are we not going to 400 now? Is that not the intended target? I'm not loving this either. I think we're overbought. CBD fell 200. Okay, never mind. I'm gonna hop in for 5 more. So I'm in a 20 total. Lower my target a little bit. Yep, nice. Up 300. Trying to scalp to 80 at least. And we're still dipping below. There we go. Come on, let's keep pushing. No, never mind. We're seeing some sellers step in. There we go. I'm getting a push to 40s now. Okay. That looks, yep, that's what I've been waiting for. CBD's up at 4.7. Let's keep on climbing. 4.7. Holding. Kind of. Wow, NQ's up 1.23%. Can we hold? Can we hold? Can we hold? Yes. No. Maybe so. I hate trading evals. I never take them seriously, dude. Never take them seriously. 35. What's my entry price? 30? Come on. We got a little consolidation phase in the mid 30s. Kind of equal buying and selling. Got some big lots step in at 80. Or 80 lot at 335. Looks like they're rejecting that lot. CBD's up another 100. There we go. I guess I'm gonna push. Nope, no push. We're in the mid-low 30s. Now the market's bleeding. Yep, this looks like a possible reversal. Yup. Yup. We just spiked down 20 points. That's wonderful. That is wonderful. Oh, nice. Can we hold? Can we hold? Can we hold? Can we hold? Yep, we can.
By the way, today is deals day. We're going to have a conversation that I see today, the investment committee theme is AI infrastructure.
Nice. So we're not completely oversold or overbought yet. Oh, come on. Don't do it to me. It's going to do it to me. I can tell. Yeah, there's a lot of sellers in the mid 10s. Yep. Down 600. Oh my, you gotta be fucking kidding me, dude. Yeah, you gotta be fucking kidding me. There we go. Another sweep. Let's see if they try to push this thing higher or not. Doesn't look like it. No, we got some buyers at 20s. I mean, 400 is still the intended target. So let's see what happens. I'm not going to try to sell in an overbought day. It just doesn't make any sense. Yep, there's that spike. Okay. I'm in for 5 more, 25 contracts. Nice, 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 nice.
It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has
Very nice, very nice. We're cooking, we're cooking. Not anymore. We're sweeping back 40s. Wow, really? Just full reversal right there? Going back into the mid 30s, really? Oh god, oh god. Back in the 40s, 45, mid 40s. Oh wow. What are we chasing? Is my big question. There we go. Bounce at the 40s again. There's a lack of buyers now in the 40s. Or not a lack of buyers, a lack of sellers. Got good liquidity at 50 to chase. Yeah, they're trying to push this thing up now. Yep. Nice. Up almost 1,000 on this position. Can we push higher? Yes, we can. Yes, we can. No, don't fall on me. Seriously? You can't push into the 50s? Coming into those orders. Yep, there we go. There we go. Come on, come on. Nice, 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 nice. Nice, 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 nice. Push, push, push. There's a bunch of buyers in the 50s. What are you doing? Wow, really? Oh, it's just so fucking annoying. Really? Come on. Let's get back in the 50s, bro. Come on. Or in the low 40s, 43, mid 40s.
Talking about Richard Nixon's 38-minute State of the Union address in 1971, but neither one of us was there when George Washington made his.
We're holding the 40s pretty well. Coming into the 50s again. Mid 40s right now. Back in the 50s. Nice. Almost at the mid 50s. Can't really see what's going on in the book. And we just got contracts at 400. We got some at 70. That's why it's getting. That's why we're getting a lot of sell pressure. I mean, CVD's up to 5,400. We shouldn't be rejecting right now. It's just such low volatility that it's just gonna chop around a little bit, and then it's gonna bounce, and then chop, and then bounce, and then chop, and then eventually reach its target. Typically, what happens. I got some sellers in the high 40s. Oh, jeez, dude. So the result is today, the gap between they're trying to take it under 30s. S&P 500 and its average stock is the highest it's been in 25 years since the dot-com boom.
Wow. So there is some movement under the surface. We still don't really see spreads blowing out, though, Ben. And this is, what concerns me the most, because I always think of the bond.
Yep, we're still holding 40s. Just waiting for that break above 50.
But as Danny points out, it feels bigger at this moment.
There's nothing that could drag it down for right now. Once we get so much selling pressure. As I say that.
Over the last few years, but this year, as the market has struggled with disruption risk, it's been a problem for the S&P 500.
Jeez, man.
Is that the economic data has been very strong, as have the earnings data. And so while the market is struggling with narratives, we're seeing companies now reporting
High
earnings
40s, mid 40s.
industrial economic activity data, even improving consumer sentiment data. And so it's very reasonable to me that the market is still pricing a pretty optimistic economic outlook.
Literally can't go up more than like 10, 20 points. That's crazy. We shoot up 200 points, but when I'm asking for 10 points, 20 points, nope. 300's got some contracts sitting there, but I think 400 still didn't take a target. We got 25,500 with 204. Could be a magnet towards those 400 levels. 75's got, you know, a couple contracts on there too, sitting there.
Stop paying their SaaS bills, right? Or how do you see it?
This is the key challenge in the market, which is if you look at actual earnings, take software, for example, that industry just...
Our seller's trying to not let it go to 400. Why would we reject off 350?
Led analysts to raise their 2026 earnings estimates. Meanwhile, that industry is down 30% over the last few months because what's happening is investors are pricing a narrative about future disruption.
Oh, come on, dude. There's no way.
The result to me is that it's very hard to disprove that narrative. And what we've seen in historical disruption episodes is it can take quite a while for real...
Wow. First time ever. First time ever.
I think that's going to happen this time too. I think it's going to take a little bit of time.
It sounds like 19 uncertainties.
Is it 19?
No, 19 like a night, like a
19.
yeah, like KN.
Okay.
Yeah, but okay, it's horribly nerdy, and I'm so sorry I'm bringing this up, but it's this idea of
Why would the target be 300? That doesn't make any sense.
Economist Frank Knight in 1921. Now, when you have these big shocks, it is any outcome feels like it is possible, and that is exactly what you're talking about. But when it takes a while to resolve itself, even if you see irrationality,
We bounce off of 30.
Market, can you really go in and buy dips? Because we won't know the future. We won't know what happens.
Oh, come on, man. I'm not asking for much. Just go up.
Even if you think it's overdone.
This type of stuff just irritates me, man. You can't go short because we're completely just buying today. And when you go long, it's going to take you, half an hour just to see 20, 30 points after the original move. So we got another pump to 40.
I think that's a really important point. If there continues to be pain, let's say, in software in these exposed sectors, isn't that enough in itself? And it's something Matt has been really great on.
And then we're just rejecting 40.
To really hurt these companies, the stock sells off.
Come on, man. We're getting a full candle rejection of 40?
To seriously damage these companies, even if the threat of AI isn't real.
Come on, dude. CVD's still at 5,000. That's why it's holding up the market. Those orders at 300 got removed too. They got removed. And now I'm bleeding out. That's so great. Wow, that's ridiculous. There's no demand in the 20s. I don't see any demand. Do they need the 20s to push it higher? Oh, great. That's so beautiful. Really.
Why do you like these stocks still?
Well, this is really reflective of what we see in the hedge fund and the mutual fund portfolios.
Yeah, because that makes sense. We have 3 different high intended targets, and then we just shoot down to the smallest target on the board on the opposite side. Make that make any sense?
Asset-heavy universe. We flagged a note yesterday on AI that we have 2 baskets: asset-heavy stocks and asset-light stocks. The asset-heavy stocks have outperformed.
The buying is matching the selling.
In the last several weeks, and I think that is again reflective of investors running away from this narrative risk that is very hard to disprove at the moment.
So, where do you want to hide out? When everything feels like it's shaking, when everything feels like it's turning, what are the safe places that you can hold in your portfolio right now and say, I don't need to worry about a research note coming out and completely destroying the stock or anthropically
Really?
press release?
To us, the clearest tailwind at the moment is that economic acceleration.
There it is. There's the pump.
Happy to say it's playing out with recent economic data, and so we've been focused, for example, on the materials sector, on a number of industrial.
Can we shoot up now? Past 30,
and even on
please.
middle-income consumer stocks, where we think we're going to see pretty substantial tax refunds get delivered over the next several weeks.
All right, Ben, been great having you on. Hope we can get you back soon. Ben Snyder there.
Really?
From Goldman Sachs. Let's get a look at what's going on in the markets right now. We are in the midst of a rally. Well, I see the small caps are now down. They were gaining. They were putting.
Small caps are down.
Yields are higher at the moment. Maybe that's
Big and quick turnaround. It's still up 0.5% right now, and the
Yeah, there's some algos trying to drag it upwards.
Not changed. I'll check out what's going on with the Russell. You can see the 10-year yield.
CBD's still at 5,000. Hasn't really moved.
Going down 5 significant digits as Tom Keene prefers, and then you can see Nvidia there, the all-important biggest company in the world right now, almost 2%.
Coming up next, it's Trump's State of the Union address. Christia Friedland, Canada's
Yeah, right. Okay.
Contributor, and Elaine Kmart, senior fellow at Brookings, who served in the Clinton.
Couldn't even catch 20 points.
This is Bloomberg Open Interest.
20 points. God, I hate days like this, man. Could have just been an easy long, dude. Easy long. Nope. We're gonna consolidate, and then we're eventually gonna go long anyways, because that's just how it works. $100 contracts. In the ask? Oh no. Someone's trying to shoot this thing downwards.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Matei. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start with the sector is really propelling the deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
That's funny.
Everything you need to know before the markets open on Monday.
Yep, there goes the account.
Bloomberg This Weekend, bringing a little
Yep.
Guys, buckle up.
That reversal made 0 sense.
Bringing you up to the minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney and in Tokyo. Get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Oh, not yet. Still alive.
And laying the foundation for the future, from finance to defense, AI to entertainment, and from the road to the stars.
I don't know why we can't shoot past 20s. That was completely defended by buyers. Like I don't understand what's going on here. Someone's trying to hedge this thing downwards.
It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that's what we try to do every morning. This is Bloomberg Surveillance.
Oh, come on.
Geopolitical news whenever and wherever it happens.
Oh my god.
In the Lesotho Highlands, and this is Bloomberg.
Supreme Court. Almost all countries and corporations want to keep the deal that they already made.
We're pumping, but we can't. Seriously? We wick 20 points just to fucking reject? Are you serious? Come on, man. What the hell is wrong with this shit ass market? Really? Come on.
His agenda. Let's now go to Bloomberg Wall Street Week anchor David Weston, who's joined by a special guest, Christina Friedland, Canada's former
First time I don't short the top and I get completely.
First of all, Mr. welcome to Bloomberg. It's great to have you here. We did have the State of the Union yesterday. We're spending a lot of time in the United States talking about what happened. I'm curious, from your point of view in Canada, for U.S. allies and trading partners, what do you think they heard?
We got New York VWAP at 290. Maybe that's the intended target. I won't survive a move to 300. I'm just risking too much. So
I would sort of like to say to your listeners is I hope that American
yeah, that's just wonderful, dude. That is just wonderful. Any buying pressure we're getting is just instantly wick. It's just, I mean, and it's just not like we're actually shooting downwards. We're just slowly bleeding out. Slowly bleeding out. And we're at 310s, 309s. Yup, just kill me. Oh, it looks like we got some buyer volume. And we can't even break the 310s. We have 116 contracts filled at 311 and we're rejecting. So what the hell is going on? I hate evals so much, dude, because you have to risk on them just to make like the smallest amount of money. And then in a market like this, it's just annoying every single time. Yup, just blow the account. Yup. We can't break 310s. There's no way. Even though we have an outweigh of buyers, nothing. We have no targets, no intended targets. All those targets got removed. Yep, and it's gonna keep on bleeding. Why? Because I don't know. Barely any selling pressure. Let me just explain this to me because I have no idea what the hell. I mean, we have complete buyer defense and we completely blow my account because of it. Like, that's just such bullshit.
He was the first really leading politician who recognized that really did hurt the heartland. It really did hurt American manufacturing workers. He started to fix that, and that is a truth universally acknowledged, right? I think across the political spectrum, people think that. What is unfortunate is all of this uncertainty, particularly from America's friends, when it comes to our relationship with America. The big winner is China.
Well, let's talk about China, because it strikes me that one of the things that your Prime Minister Mark Carney has done is travel to China and negotiated some adjusted trade deals there. Is China the big winner here? And by the way, China was not mentioned last night. It's been a long time since she was mentioned China in that speech.
Yeah, I think China was the big winner.
And yep, we're bouncing out overnight.
China today, when it talks to countries like Canada, is casting itself as the
Well, I gotta buy another account, which kind of sucks.
as a country that particular middle powers like Canada can trust, can lean on. That if you do a deal with China, it's a deal that has meaning. And China is also casting itself as the defender of this international order based on rules that the U.S. created. Now, my own view is we need to be a little bit skeptical of commitments from China to do that. I was foreign minister when, in retaliation for Canada's decision to
Another lucid flex.
the United States, 2 Canadians were illegally seized, arrested by China
What was that dude's name?
International experts concluded that their treatment
Mm.
amounted to torture. That is not the behavior of a reliable partner. But
It's not on the tip of my name. Tip on my tongue.
right now is
Ross, right? Code Ross for 50% off.
that Beijing
First 2 accounts, $65.
I think that's really sad, and I don't think that's in America's national interest.
And finally, Christian, I mean, talk about the economics of it, the business of it, as it were. There are the geopolitical consequences. But
So
also,
down 130.
Canada, the United States, the economy of the West, going back and forth, up and down on tariffs.
Well, David, you talk to business leaders all the time, and I bet the one thing you hear most from business leaders that they hate the most is uncertainty, right? That is what drives business leaders crazy, and rightly so, because it's
I gotta wait like
really
5
hard to
minutes
make
now.
investments if you don't know what the rules will be that govern those investments. I think right now we are living in an environment.
Yeah, it's my fault for going 15 lot or 25 lots. But I mean, the reversal made no sense down to New York. We had like almost zero demand. CBD only fell 500, and we slipped down 50 points. We had no reason to reject 50. I didn't see any selling activity at 50. I guess the buyers just got worn out. But it's fine. I'm not worried about it.
Well, I thought it was wonderfully staged. It shows again what a great showman.
First time I don't take the short
Stories
at the high.
that were all great.
Because I knew it was going to be a short like this.
Cut down.
Then we're going to reject 300s.
So there was a sort of spotlight on them.
I gotta wait 5 minutes.
And frankly, the timing of the stories made 2 hours State of the Union a lot less
There we go.
than it normally would be. So I thought that was great.
New 50K account.
A problem, I think, is that
Okay. Now let's retry this
as the economy is underwater,
by 5 lots at New York VWAP.
way underwater on economic issues. And while he was speaking, I flipped back to Joe
We are
Biden's
bouncing, so
2024 State of the Union. And there we have all of the
target is still 400.
things that Trump was saying. Inflation is coming down.
Yeah, I shouldn't have went 50 or 25 lots. I shouldn't have done that. That was retarded to me.
Economic data, which no one believed. And that hurt Joe Biden. Nobody
And we're going straight towards my stop loss.
which is why, the Democrats got into such a mess. And the
And my stop loss got hit. Down 190 bucks. For it to immediately bounce up back. Okay. I'll retry that then. Because there's still buying demand above 300.
And guess what? We have
Stop loss at the low.
And the same thing is happening. He gets very low marks on economics, and it's spreading to other areas. So the next place he went after economics was
This is, A plus setup. Bounce off in New York towards liquidity levels to the top.
And there, the public was with him right up until the summer when he was closing the border. And then when they switched from closing the border to mass deportations, what happened? He began to lose support. So ironically, he now has less support.
There's so much buying demand at 98 and 98.75. There we go. There's that bounce.
Trouble, and there's a funny way that he can't seem to get out of it.
You're so spot on. It's the same mistake that had been made before.
There we go. We're up 200.
To Congress people in a midterm
We're at 311.
going out and campaigning.
If we reject 310, I'm going to be so angry.
We feel your pain. We know things are rough. We're trying to help you because by doing that, it would be explicitly saying that the Trump movement
Wow.
is real.
Wow. That is disgusting. That is disgusting. What is that sweep, dude?
And that's a real problem. And when you're out there campaigning, if you're a Democrat, it's easy. suspect Democrats might have a pretty good year this
It's like a pretty good bounce. If we don't care, I mean, he's up another 400. Really? Oh, come on, dude. Really?
the macro and the micro, to some extent, between the overall numbers, the stock market, etc.
So we're just gonna consolidate for the rest of the day. It's only 9:30, dude. We got one move to the upside, and that's it. 200-point move, and we're done.
What struck me in watching yesterday, Elaine, was that the economy is doing very well. At least if you look at just GDP growth, low unemployment, inflation isn't down to 2%, but it's not 9%, right? And I'm not sure that President Trump's his exaggeration really serves him well in this.
There we go. We're getting something.
Think about that, because I'm sure a lot of independent voters watching couldn't even.
Can't even get 10 points, really? Before we start rejecting, what in the world is going on with the spread, dude?
Sure. Look, that is the crux of his problem.
Wow.
He is incapable of showing empathy. He simply can't do it. Most of our other presidents have led with empathy. Whether it's the Jeffrey Epstein case, where he has yet to express any empathy for the victims, or whether
Can't even break above 310. That's nuts.
He doesn't see.
Great rejection of New York VWAP too.
And we've had some great presidents. Bill Clinton, the man I worked for, was terrific at feeling people's pain. Ronald Reagan was good at it. George Bush was good at it. In other words, most presidents have been good at this. Trump doesn't.
There we go. You got some kind of push upwards.
So when people are in pain and he's boasting about these great numbers, it doesn't work.
So let's take us into the future. If he has lost the narrative,
3.
he suffers a defeat.
All right. TP's 80.
Midterms. It's been sweeping changes that this presidency has tried to put in. Elaine, what does that look like if you get a turn in Congress and Trump finds more friction there?
Well, the first thing to remember about his sweeping changes is very little of those changes are instinctual. In other words, he's been a president who's governed totally by executive
10 micros.
because they are not
Not oversized, but just size enough so I could try to pass this thing. What? I mean, look at the buying defense. Look at the buying defense. Nothing. Nothing. Really? Get random CVD's still going up, so there's still a bunch of buyers holding this thing up. Can we just please swing upwards? Like,
one of the things driving inflation and driving this unhappiness at the kitchen table is that healthcare costs are.
we got 184 on the ask. Filled. I'm like, what? Bounce off of New York towards liquidity levels. Positive CVD. So we're on the right side of the trend. But we just can't hold 310. Can't get more than 20 points on a push.
LinkedIn Hiring Pro can help you find the ideal candidate for your small business. It cannot help you find the ideal restaurant for their welcome lunch. It helps find people who are 30% more likely to stay at the job for at least a year.
Okay. Low 20s.
While we cannot remind you not to go back there for their work anniversary,
This is cashmere. So
LinkedIn can help you hire friends.
We're up almost $500 in this position. We're in the mid 20s. Rejecting for some fucking reason. In the upper 30. Okay, yeah, we're in the 30s now. That's good. Can we still shoot upwards? Yep, there's that pump we were looking for. Up 700.
This is the money shaping the world. The dealmaker playbook where power conversations with Finance's ultimate insiders. Bloomberg has learned that there are discussions around a potential all-cash offer.
Can we not reject 30s like we did last time?
So the past few years, we haven't really seen any deals above $30 billion, and now we're seeing, Warner Brothers.
CVD still heading upwards.
I would expect
Mm-hmm.
maybe a better year for M&A and IPO.
35, yeah. Good thing I didn't trade the the funded today. That would have been a disaster. I would have been way more careful with it though. Obviously, I'd go in 2 micros instead of 10.
To have the same sort of structure and contours. I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
CVD's falling.
Investors wanted to know at what price would this deal be, and now they answered that question at $70 a share. Congratulations to Bloomberg's deal team for getting it first. I'm Tammy Berger, and this is Bloomberg Deals. Every Wednesday at noon Eastern, only on Bloomberg Television.
Can we not reject 4-hour open? 108 lots. Someone's trying to buy in at 34. I think should push to 40s. We hold 112 at the defense of 33. Just negative delta in the 40s and 50s. That's the problem.
A report from a little-known firm called Trading Orderflow sent shockwaves across multiple sectors this week, outlining
And we're dipping. And we're completely rejecting 30s.
Among the
Yep.
scenarios, AI agents seek to save users by eliminating transaction fees charged by payment processing firms like MasterCard and Visa. Let's get insight on how one executive is navigating potential risks from AI. Stephanie Ferris joins us at the desk. She's CEO of FIS, a fintech that helps banks, merchants, and capital market firms process payments globally. Stephanie, so great to have you. I'm sure it's been a very fun week for you too. With everything that's going on. And look, of course,
Still in the high 30s. There's good defense for buyers. I don't see any selling demand. Literally, like none.
Processing world and interchange fees completely gets disrupted by AI. Well, it's a great question, and it's certainly a hot topic.
CVD's holding very well.
I think
This is such a choppy market.
financial technology firm that serves financial services broadly. We see more money that goes across our entire money life cycle for like 12% of the world's economy.
Are we finally getting that pump? Can we just push through the 40s? It's a big question. Up 800.
As we tackle this question, is why we're so excited about 2026 and beyond and so optimistic. And I'll bring it back to AI, but financial services in itself is growth on. We are really seeing a generational moment here. So you think about the banking industry and where it's at today in terms of its ability to have less regulatory, be able to grow organically or inorganically, $50 billion worth of M&A transactions last year, being able to innovate inside the financial services industry with crypto and tokenized deposits. So financial services, as a set, which payments is part of that, has a real growth on agenda at the same time as
Dude, if we're gonna reject 40s again, I'm gonna cry, honestly. This is the worst type of market to trade. Let's pump 200 points, 300 points at open, and then just not do anything for the rest of the day. At least to reach the intended targets, man. Like, come on. CVD's stable. There's a bunch of buying pressures in the 30. I mean, we're up 36 points on this position. Our entry was exactly 300.
And they're AI enablers. So we don't see a world where we're disrupted by AI. We actually see a world where AI is a strategic accelerant. And I think that's what you're going to hear from a lot of us that run technology across the financial services industry.
And we're completely rejecting 30s again. What a day. What a day. Back in the 20s. Yep. I wouldn't be surprised if this thing shoots down back to 300, even though we have no demand at 300, zero demand. Unless the demand wasn't created yet. This is algo demand too. I mean,
I was thinking about this when I read this Trading piece. He obviously brings up crypto with his reference to Ether and Solana as maybe a
26, 24 has all a bunch of buyers in there.
And you've seen this before, right? In your career, you were at Fifth Third dealing with payment processing then, and at PwC before. So AI is just another. I mean, you've seen generational shifts with Bitcoin in 2009 and with the internet in the late 90s. So, do you adopt those technologies?
Yeah, and we just completely bleed. Really. We have a 40-point rejection. Sure.
No, absolutely. We have to adopt them. Right? Our job in terms of payment capabilities, and you're exactly right, whether it's a check, ACH, wire, real-time payment.
Wow. What kind of bullshit am I watching, dude? What kind of bullshit is this fucking market on, dude? Okay, yeah, and then we just shoot past 300s. Mm-hmm. Yeah, sure.
We have to have that capability. The great news is we have all, and the good news is we're not seeing any of the other things go away. It's an and, to your point.
Right.
We haven't seen ACH go away. We haven't seen branches go away. We haven't seen ATMs go away. It's an and. So for us, it's an and. Now, when you think about a technology company ourselves, the thing that I'm most focused on as a CEO is making sure that I enable my entire 55,000 people to be not only AI
Yep, and now we're just slowly bleeding. That's so funny. That is so funny.
In terms of that, like you talked about, to deliver to our customers the products, but also to make sure that our technologists are the best in the industry in terms of how to use this technology. It's like putting a computer on your desk. I talk to them all the time about, well, most of them don't even remember, but remember when you had a desk and you did paperwork, and then the next day you had a desk and you had a computer. No one taught you how to use it. You powered it on and figured it out. And so that's how we're thinking about it. We're making a lot of investment in our colleagues to make sure that we keep them upskilled and that they can actually be cutting front end as a technology.
How are you thinking about that growth of your talent? Because there's one theory, you added more AI and less people. And the other one, which maybe is more interesting, if AI can do more and can produce more code, you need more people to oversee that code. How are you thinking about things like headcount as you add technology to what people are already doing at FIS?
Yeah, it's a great question. We get it all the time. For me, it's most important as a technology company CEO. I need everyone in my company to be using the most cutting edge technology. Whether we're using it to deliver for our products or we're using it internally for ourselves, I put it in every single person's hands.
So we're just getting this all off now.
Digital agent capabilities. Now, the challenge is, and then we give a lot of learning, but you have to have a natural curiosity to want to do it. I talk a lot about my dad who lost his job in the 90s and didn't know how to work on a computer. I came into my career in the 90s and I had a computer. I never knew how to not work with a computer. He never knew how to work.
What the fuck is this bitch talking about?
So that's really where we are in terms of AI. You have to want to learn how to do it. And it's my job.
Yep, and we're just dipping now.
And I encourage you to do it. And then it's really up to you to make sure that you embrace it.
One of the things you need at FIS is obviously for consumers to keep powering this economy.
For sure.
Right? And
this looks like classic bearish price action though. Still holding New York.
Part of the alarm that this Trading piece raised is that the white collar jobs are the ones that are going to be lost now. They're the ones that power the bulk of the spending. How much do you?
This is insane, dude.
You gotta think about it. It's so big picture and it's so kind of nebulous, but it would be a concern, right? If the top 10% were reduced in terms of workforce.
Yes and no. So you're absolutely right. So first of all,
Short-term demand just to go low, and I don't understand.
In fact, because of the large data that we see, not only are financial services and banks booming globally, but the consumer continues to remain healthy. I think you just talked about that on your previous.
Only real demand's at 400. 400. You got two levels right below 400 too of real demand, and we're chasing algos down below.
growth on. I think that's and that is true globally. I think that's really important to reinforce. And it's also why we as FIS serving that sector feel so good about what's going to happen for our company. But also I think it's important to know we aren't seeing any signs of that yet. So in terms of then how to think about the workers, like frankly like myself that are older and need to adopt new technologies.
You're not older.
Oh, thank you so much. Look, I think this is my point where I tell the story about my dad. And I talk, by the way, everybody tell everybody, it's a great ending. He retired. He couldn't figure out how to do save or save as on the computer, but my mom could, and he was very happy. So it's a happy story, but I do think it's incumbent, and I talk to my teams about it a lot. I'm not worried about the younger workers. My daughter's about to graduate and come into the workforce. She needs to get a job. She will know how to use AI, just like I figured out how to use a computer. It's really incumbent upon me as the CEO of the technology company to put that in everybody's hands. Do I worry about it? I yes and no, but we need to make sure that we're giving everybody an equal opportunity to get after it. The Citron research story, as I told you before we came on, it was super depressing, and then I woke up the next morning and I was, again, going back to my optimistic point as a CEO.
Markets too.
Yeah, it's too much to take, and so I think we're all going to be just fine.
Stephanie, this
is just fucking stupid.
Another hour. I also think, by the way, part of this conversation is why it's important that like schools are teaching AI and they're not resisting against it. Stephanie, please come back again. This is so wonderful.
Are you actually from the great state of Ohio?
I am.
All right, that's why.
Oh wow, we're not.
And you and I have a connection there, don't we?
I have to sit here for fucking over an hour just to see a 10-point move.
Great job,
I love this, Stephanie. Thank you so much again. That's Stephanie Ferris, the CEO of FIS. Coming up, how TKO Capital is navigating private debt concerns percolating around Wall Street. Also, a new $1 billion private credit secondaries fund. All of that's coming up.
A little iceberg law at 37 and caused us to reject 40 points, 50 points. Are we coming down to overnight VWAP? Is that the intended target? We can't even break New York. Zero volatility in this market.
Vacation is over. Welcome to Vacay, home in the Cayman Islands. Vacay doesn't write itineraries, it rips them up. It doesn't just eat, it savors. Vacay is true time off. Vacay is the vacation. Welcome to Vacay, home in the Cayman Islands.
I'm sure we saw that.
Oh my goodness, we're up 3 points. Oh, there we go. 10-point jump.
Demand is an all-time high. Having a ribeye at the top of the pyramid there is certainly going to lift demand at a time where supply is at an all-time low. We've always noted on raw steaks that beef is a high-quality meat protein that's good for the human body.
And we get completely absorbed, even though it's just all buyers. CBD's up another 200 points. Down to 306. We're at 307, 8. Down to 6. Okay. We're up 15 points. See if we're going to stay up 15. If you look at the big bubbles, it's all buyers. And then we just reject off 310 because we've done that 10 times already. Yep, and we're completely rejecting. Even though that was all buyers. Rejection of New York, yet again.
Introducing Bloomberg this weekend.
This is the most tilt-inducing market I have ever seen. Can't even make fucking $500 on this market. Right side of VWAP, intended targets up above, rejection of 310. Why? Just because. Multiple bounces off New York, zero follow through with it. I mean, it's a terrible market. Yep, and then now we're just swinging lower. Like, what? Okay. Yeah, bleed me dry. Thanks, NQ. Sure. Where's the demand? The 37 contracts at 75? That's the demand. Spread's trying to take it up. 89 filled contracts at 300. 89 buy contracts. Like, come on. 99. I'm trying to not lose my shit here, bro. I'm already down an account. So some bullshit. If I lose this trade because of some bullshit, I'm gonna be very upset. This is gonna be my last trade for the day. I'm not gonna tilt out and try to fucking blow more accounts.
Sometimes, effectively, when people realize that they want out, you've got this mismatch. You're not trading juicy-based securities.
I've never seen a market where there's positive 4,500 CBD and we can't make a follow through. Not a single follow through with real demand. Like, that's just insane to me. That is insane. Right side of the market, rejections of New York. Multiple order levels that are highlighted to the upside. We have positive CBD, which is continuously climbing, if not consolidating. But no, we're stuck in a 50-point range.
This was the greatest invention since the internet, private credit, right? When it really was just lending money to small companies. So, how do you see the wheels on the car? Are they coming off? Is it that bad, or is this just the kind of blip that Mark Lipschultz says they've been through before?
Yeah, well,
Rejection of 310 again.
They want to take the opportunity to park their garbage truck, and try to fill in, with everything they could.
Which, by the way, Boaz Weinstein, of course, did buy some of what was sold off to Blue Owl.
And he wants to take, he has really taken the gloves off that.
The secondary private credit, that is the new asset class in itself. You know what happened to the private equity secondaries that has grown in the past 20 years. Now that the golden age of this new asset class, for sure, because you're going to be providing.
Yeah, and we got the hedges too. Are trying to use the icebergs as liquidity? Is that what they're trying to do? Because I can't tell. I can't tell what the hell's happening right now.
So, and of course, we should mention you just raised a very large secondary private credit by $1 billion. So, you hear stories of Blue Owl is selling some of their BDC exposure. New Mountain Capital, what does it actually look out there? Is there a fire sale happening on right now?
Actually, the private market are not reacting as aggressively maybe as the public market if looking at the stock, at the stock price. The processes are still, they're still orderly, in an orderly, manner for sure.
We've had like 40 rejections of New York VWAP. I'm not asking for much. I'm just asking to reach the intended targets.
expecting for some distress. They think it's certainly too early because yes, you
Maybe
have
they're their best assets, but I mean, you're right. The Blue Owl said, I think they got 99.7%. New Mountain got what, 94%. So the numbers are getting lower. But are they selling their best assets to get those high numbers?
sell the best and keep the rest, right? So,
Yeah.
But no, I mean, our price, if I talk about TIC, for the past 5 years we've been active there, our average price was 85 cents a dollar. Because if
I mean, they're sweeping stops below New York, but
crystallize for your investors. And so I
just doesn't want to take it upwards. I don't understand why.
The nature of the buyer, and if you look at the nature of the buyers who provide liquidity,
Have multiple buyers at these levels.
people have different type of
Look at this. Look at the outweigh. Look at the outweigh in the volume. Look at that outweigh.
Well, the buyer also, in some cases, is the insurance.
This should have bounced like an hour ago.
Is that a problem?
No, I mean, I cannot comment. I'm not involved in this transaction.
Well, what about, okay, so part of Jamie Dimon, and of course I caveated it by saying he loves to be there's a problem in private credit.
Now we're just stuck in the 10-point range.
This time that maybe the 2008
40 algo contracts at 87.
The original sin in the public market's minds of what's happening with private credit. What is your software exposure like? How are you thinking about this as an asset class? Is there concern? Is it all
Well, I mean, we went public with that last
Volatility's picking up.
Software exposure is 7%, which is
Looks like it's just sellers.
Yeah.
Yeah.
Industry services, or others. So I know if private credit is the best invention, since the internet, but probably AI is, right? And so that's where people wake up, to this big theme around you. But not everything will go to zero, otherwise you have a serious issue on the market, and that's on tape for sure.
All right. So it is a
Can we get some kind of follow through?
buying up these assets, and you're saying it's a new asset class.
Nope.
But it's really just you're bargain hunting, right? With the secondaries fund I'm talking about. It's like what Howard Marks does, or
I hate this shit.
Instead of going to one single asset, referring to auction or great investors, what we're doing here, we're providing liquidity to LPs in their commitment, into other GPs. Very similar to secondary private equity. The big difference is the maturity, the coupon, and the nominal. So you know exactly what you're walking away from, like private equity. When you look at the development of the secondary PE market for the past 20 years, which is now a proper asset class, you look at what Connors sold themselves, a couple of weeks ago, looking to EQT. I mean, it's a proper asset class. Secondary private credit is in the early days because we're just coming out, of this very solid primary cycle in the past 10, 15 years. What's happening right now in the market is a great, wake-up call for some. This asset class will get organized. And so we've been active there for 5 years. It's not really providing liquidity. Some people looking at rebalancing the portfolio, changing regulation somewhere.
exactly. Well, I think of secondaries in private equity. I don't know this market nearly as well as Danny or you. I think that it's sort of passing the hot potato, right? We can't find any other exit, so let's create another fund that is the exit. In this case, though, you're buying hopefully not distressed assets, but buying assets from a maybe distressed buyer.
Well, actually, a distressed seller. That's not the case. Today, the people who are selling are pension funds, insurance companies, sometimes family offices, with change of your leadership. It's a rebalancing of portfolio. Remember that to the point about this big primary market tailwinds, to private credit.
Sure.
That happened. That started by the way when interest rates started raising. 5 years ago, when it came out of the zero interest rate policy, that's when the asset class effectively started developing, and we took advantage of this opportunity. Others have since then. People who thought originally it was just cyclical, COVID-like, people were freaking out, and the world now has become really structural. And I think we're only here in this. There are many people who now
Yeah, we had a full break of New York. Yeah, that's just great, dude.
It's so wonderful to have the same voice in what otherwise feels like a crazy market. Thank you so much for joining us. Please come again soon, Manjusha Bra, the TKO co-founder. Let's turn now to NVIDIA. They're reporting results after the closing bell, coming at a time with concerns over AI.
Yup, just fuck me, I guess.
Allen has a buy rating on the stock with a $200 price target. Joshua, what are you expecting from NVIDIA
Thank you for having me on. Here at TD Cowen, we're expecting another solid beat and raise. I think investor expectations right now are probably for NVIDIA's usual $1 to $2 billion beat and raise quarter. We think there could be some upside to that, but I think it's going to be a healthy reminder that NVIDIA's
Yeah, now we have fucking demand. These fucking assholes.
very strong fundamentals that are going on for AI compute infrastructure investment. I do think it's going to be an important almost factor for understanding how the stocks are positioned to react to earnings. Fundamentals have gotten better over the last 3 months. The stocks haven't moved. I think that could change, but it's going to be important to see how the stock reacts today to the earnings.
I keep looking at the stock NVIDIA over the last month or 3 months or 6 months because it feels like it may have gone down or just moved sideways. I see in 6 months it's up.
I think this thing's gonna slip downwards.
Is like a sideways movement, right? Compared to what the kind of acceleration that we're used to. What do they have to do?
Even though CVD didn't even slip up that much.
1,400% 5-year rally on.
I think that's healthy perspective.
Yeah.
Just because it hasn't moved in 3
Why
months.
not? Why not just fucking dip 30 points?
But I think it's about, again, maintaining its leadership position, reminding people that AI investment is early and perhaps most importantly durable.
See what happens at overnight view up.
This quarter is going to be maintaining its gross margin trajectory. So we're seeing a lot of
Shredding through overnight view up.
because of rising input costs, most explicitly high bandwidth memory. And I think if NVIDIA is able to maintain a confident tone on hitting
Pure sell-off at the highs, really?
margin profile, I think that's going to serve 2 factors. One, it helps them show that they're able to manage these higher input costs and maintain their profitability. And 2, there's not.
This makes 0 sense, dude. 0 sense.
Deals we've seen elsewhere in the AI compute space.
Josh, only a little bit of time here left, but I mean, could we really even get any surprises today? We know what the hyperscalers are spending. We know that they've lifted CapEx. I only got a minute, but surely what could even be a surprise in this report?
I don't really disagree. I think it's going to be a very typical NVIDIA quarter with very good numbers and very bullish constructive commentary. And I would also note when you're thinking about the catalyst path, NVIDIA has this GTC investor event coming up in mid-March where they're going to probably want to hold news and spend more time on new product announcements, new partnerships, and speak more broadly to the AI ecosystem. So I don't disagree that the directional commentary should be surprising, but I think the numbers, and again, against the fact that the stock hasn't moved much over the last 3 months, just the sheer numbers could be good enough.
Josh, great having you on. Really appreciate it. Hope we get you back soon. Josh Buchalter there of TD Cowen. This has been Bloomberg Open Interest.
From one hotel room to another one. This is the Game Changers. Silence. Flatbed.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The dealmaker playbook for power, billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates. Plus,
We're shooting up now?
Finance's ultimate insiders. I'm Danny Berger.
What are the odds we actually hold this?
Every Wednesday at noon Eastern, only on Bloomberg Television.
Come back to point of control at 300. Rejection off overnight. Yeah, right.
Point in your tennis career, do you say, I've had enough and I'm just going to retire at the top? Do you ever worry about that problem staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than what I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was was also at an age where just my body didn't recover as quickly. And
That's not terrible.
For a year or two, that stubbornness got in the way of other great things in my life.
What would you say?
It's not terrible.
Proud of having done as a tennis
Is this finally the move we've been waiting for? Got a lot of buying activity.
Consistency is
There's liquidity at 300.
and they could, come at various times in your career. But I was
We're up.
consistent for many years. And
We rejected New York.
you don't just show up to play first round in the finals, but you have to show up for press conferences after, before every match, before every tournament, and just the consistency. And
We're up. We're up. I added in at overnight. Risky move, but fuck it. That's all buyers. That's all buyers, dude. All buyers. Don't reject New York. Don't you do it.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is the
Come on, I only need 30 points.
Drowning in emotions. It's about understanding what's actually happening. Markets are the best
30 points is all I'm asking for. Nice. It's a lot of buying at 696. 96 holds up to 300. Let's get to 312. Let's get to 312. Come on. Don't reject off of New York.
This is Bloomberg Tech. Coming up, all eyes on Nvidia. After the closing bell today, we'll discuss investor expectations and a lot more.
Plus, Anthropic loosens its central safety policy, once core to its mission, amid a growing dispute with the US Defense Department over guardrails.
And Square partner Alfred Lin joins us with the CEO of his new portfolio company, Spaces, Michael Manapat. Later,
This is the move.
Private markets to go back to the public.
Yes.
Get a little bit of a reprieve today, and we're up more than a percentage point on the Nasdaq 100. And this is as we anticipate.
Yes, finally. Finally. Finally win our first trade today. Don't do it. Don't do it. And what the hell just happened? What the hell just happened?
If you look back at the last 8 quarters, actually the reaction is typically pretty muted, but Nvidia has fallen in at least 4 out of the last 6 post-earnings sessions. And then there's the guidance, so to speak. Bloomberg Intelligence senior analyst Vidyan Savani joins us with what to expect in your preview. We think
Just had a random 20-point spike in selling activity. CBD is still going up. Went down a little bit. Okay.
Expect them to peak by mid-single to high single digits. But as you said, stock has not done much since CES because most of that goodness has already been digested and priced in. So investors are waiting for the next big thing, which I don't.
300. Yes. 304. Okay. Never mind. We're under 300 again.
Pipeline for 2026 and any signals he can give us regarding demand spilling into 2027. So that will be key for investors.
Can you tell us about how much we need to understand in terms of any potential
Don't tell me we're rejecting 300 again, dude. Dude, what is this random ass selling pressure? What is this random ass selling pressure, bro?
There is this part of the story of technology marries with their financials, and that's probably in margins, right? Margins are at 75% right now. One of the things
Don't take them down. Don't take them down.
The increasing proportion of content
Up
that
300.
used to be just the GPU, so much more now.
Dude, the second we get to 300, dude, it just instantly rejects. I don't know why. When the delta's positive, there's a massive amount of buying volume at 300. All the liquidity's forming to the upside. Buying pressure is stable with buyers. CVD is up, continually going up. It's just some kind of passive sellers in the market that's just trying to take this thing lower. It's literally all it is.
The biggest risk to equities is a breakdown in the AI trade. Article to Chief Investment Strategist of Empower saying that if there's clear evidence that AI won't be as transformative as expected, could undermine a major growth engine for both the US economy.
That is so ridiculous.
Everyone's worried that it's too effective.
That is so ridiculous. Come on.
I mean, it feels as though when we look at AI, everything.
Can we press up higher, please?
Lost confidence in the epicenter of the AI trade, hyperscalers, Nvidia, Meta, and at the same time, they're questioning how
This is just insane.
AI will be in disrupting all these other industries. So
We're gonna bleed now? Really?
When it comes to AI at the moment, I do think this opens up opportunity. I think it opens up
Why is it saying I'm down with that?
Opportunity in some of these disrupted industries. When you say opportunity, you mean start to catch the falling knife, start to have to add to your investments in companies that beat up. Yes, absolutely. And the falling knife narrative is especially important because it is a bit dangerous. We are looking at a transformative technology, and we don't exactly understand.
Man, this is the worst market I think I've ever traded. Like, genuinely. Zero volatility. Going against all technicals. No follow through in any order. Like random spikes of selling pressure. I don't know. I don't see the demand. I just don't see the demand to go lower. I just don't see it. 20 contracts filled to go up. Are we going up?
Well, in terms of the day-to-day price movement with how investors are going to react to Nvidia, I think that's anyone's call. I do think there's a thread the needle type of environment where they have to be just right, this Goldilocks scenario. But I think the real question is what can slow the disruption or the fear investors have around disruption. And I guess I can't point to an immediate catalyst that would make investors say, hey, all is well with a lot of these stocks, because what we're worrying about is not the here and now, it's several years out. And so that's why I think when you're looking at these opportunities, you really do have to take
Can we shoot?
a longer term mindset.
Quite rightly, when the team met this
I'm asking for 20 points, 25 points.
going on at the same time. And you reflect on this, notice, right? Earnings have been
The least stressful eval trading day, I swear. Not even looking for a max win, dude. I'm just looking for a small push to the upside. Like, I don't understand how much pressure we need to break 300. Like, I don't understand. I don't understand.
We've seen strong earnings, strong revenue growth. I think that's a signal of fundamental health. I think we see that in technology as well.
I know I'm on the right side of the market.
I've been amazed by, or maybe not amazed by, but I think it's noteworthy, is that despite all the investment,
Great.
Yep. Companies are not slowing down. Those jitters are not disrupting their plans. In fact, they increase
Zero demand under 300. Zero demand. Just some algos coming in and out. Multiple demand right here. Right here. I'm up 500 now.
Steaming forward, Marta, what we've seen a lot of steam on is kind of AI doom or dystopia. We've seen a lot of those head out. Look, some of them by the very leaders of Anthropic, for example, talking about the analysis of technology. We've seen the Trading research just
We got buyers coming in.
shockwaves through the market as some have labeled it sort of basically completely dystopian, made up. But in other ways, some people put some real credence to potentially double-digit unemployment due to rapid education.
This is nuts.
How are you thinking about it?
There's no reason to reject 300. There's zero reason. Oh my god, and the spreads were running wild now.
What investors really fear is
that worst case scenario. We hear it time and time again that AI is going to destroy the labor market. And so these notes are valuable in the sense that they put real color, they paint a real picture to what that looks like. But I think what we have to remember is
what are these rejections of 300?
Perfectly, and that's one.
There's so much demand to go up. CVD is going up. Orders are filling up. Buyers are coming in and defending these positions, but we can't break above 300. Make that make any sense? Like, this isn't impatience, dude. I've been waiting for an hour and a half for this move. I'm not even targeting 400. I'm targeting 327. And that's all buying pressure too. There's not sellers getting executed. There's just buyers. I don't understand this fucking market. I've never seen like price action like this. The second we get above 300, it's just instant rejection. Like, I don't understand how that's possible. Like, does Jerome Powell know I'm in this position and decides to fuck me? I can't even catch 20 points, man. On the right side of the market. Volatility's picking up. Is it going to finally shoot higher? Look at all those buy orders that just got executed. Let's break 300, please. 300 is point of control. Getting some kind of spike, but it's relatively nothing. CVD is still at highs.
Geopolitical news whenever and wherever it happens. I'm Jennifer Zapasatja in the Lesotho Highlands, and this is Bloomberg.
We're telling the major tech companies that they have the obligation to provide for their own power needs. They can build their own power plants as part of their factory, so that no one's prices will go up, and in many cases, prices of electricity will go down.
Okay, so the spread's just failing. I don't understand.
That was President Trump during his State of the Union address, saying his administration told major tech companies to build their own power plants for their data centers. An announcement becomes amid growing opposition to data center projects around the country, blamed for a jump in electricity prices. Bloomberg TV's Washington correspondent Tyler Kendall joins us now. We knew that this would be about the economy, and we were looking for lines in the president's speech and address that were related to AI. That was probably the clearest. What else do we need to know?
Definitely, Ed. That was the clearest, particularly because it goes back to the issue of affordability, which really seemed to define President Trump's comments last night. Because this push to have big tech companies build their own power plants ties back to the idea that the president wants to see those electricity costs come down for American consumers. Now, as you mentioned, we were expecting this announcement from the president. Bloomberg News reporting that he would roll out what's being called a ratepayer protection pledge, though he didn't necessarily outline additional details, including how this would be implemented or enforced. It is our understanding this would be a non-binding pact, though people familiar with the matter do tell us here at Bloomberg News that the White House is in active discussions with companies like Microsoft and Alphabet about signing on to these pledges. We very likely could see a more formalized effort announced by the White House next month, amid reports that there will be a formal White House event here where I am, as the administration is trying to show some more forward progress. We know, for example, officials had called just last month for the nation's largest power grid operator, PJM, to host an emergency power auction specifically for these big tech companies, because as we head into the midterms, it is all about affordability. And Ed and Caroline, that's
Can't move 20 points, bro. 20 points.
Focus more on those domestic issues instead of foreign policy issues, despite those really being the ones to dominate the headlines here in Washington in recent weeks.
I mean,
Trump said to build their power plants for AI companies, bro. And nothing wants to shoot up.
Right, Caroline. I mean, President Trump really did double down on his tariff plans last night. In fact, he threatened our trading partners with additional levies if anyone looks to rearrange or renegotiate the trade frameworks that are already in place. Of course, front and center in that chamber were some of those Supreme Court justices that struck down.
This is just crazy, bro. I don't understand any of this. What's going on?
President Trump did not directly address China, which is pretty interesting considering that
Every time you think you know how to trade, the market will just completely go random on you and just consolidate and just take you out. I'm not down on this position. I'm break even. Now I'm down $100. But I mean, there's no reason we should have even shot lower. I mean, all the demand is to the upside. Quite literally all of it. We got, passive sellers hopping into the market, somehow not letting it go past 300.
Hi, Ken. Thank you so much for the breakdown there following the State of the Union. Now, sticking with Washington, Anthropic has loosened its central safety policy to keep pace in a rapidly changing field. Now, this is after
CVD is still at its highs at 4,700. CVD hasn't changed. I'm telling you, if I hopped out of this position right now and went short, it would bounce immediately. Immediately.
But they really highlight that despite rapid advancements in AI capabilities in the last 3 years, government action in AI safety has been slow. Is that what they're trying to call out here?
Carol, that is one thing they're trying to call out, but they are also acknowledging the stiff competition that they face in the AI space globally. They are competing with OpenAI, XAI, and of course with Google for a piece of what Marco North was also acknowledging as a massive competitive landscape. There's so much business to be done out there, and we have seen industry after industry shaken by the prospect of some of these new tools from Anthropic and from other providers.
Seriously.
The way business is done and how people actually do their work from day to day. So there is both that question, but then also the one you zeroed in on.
And then we just sweep it.
At the federal level, when it comes to
Nice.
discussion of these safety-oriented issues. And of course, that's the conversation coming up now at the
Nope.
The company is insisting.
Looks like we're gonna shoot lower.
Relaxing that those two standards, that it doesn't want mass surveillance of Americans via the Pentagon.
There's not even liquidity sitting there, bro.
Or the fully autonomous use of its technology in
312 is actually the most highlighted,
again,
or 300 is.
relaxation of that safety principle.
We want to go to 75 for what reason? For 24 contracts?
Take us inside the room. We reported that Anthropic CEO Derry Ramadei met with Secretary Hegseth, I believe, yesterday, Tuesday. There is a deadline of Friday from the Pentagon's perspective, but in our reporting, Anthropic
has conditions.
We have 3-point candles on NQ. 3-point candles. This is probably the worst type of. I mean, the last 3 months have been the worst market conditions I have ever seen in my lifetime of trading. Like January, or not January, like June, July was slow for sure, but we'd still get like solid 50, 60, 70-point moves. But this is unbelievable. Genuinely unbelievable. I can't believe it. How bad these market conditions are.
Failing that, they would actually declare Anthropic a supply chain risk, and that would mean that vendors with the Pentagon would have to certify that they are not using Anthropic's technology, and that would pose a business risk to Dario Amodei and his business.
Good, that's Mike Shepherd. Thank you very much. Coming up on the show, we're going to speak with Circle CEO Jeremy Allaire, fresh off the company's earnings call. This is Bloomberg Tech.
CBD's going up too. That's the crazy part. This is the first time I've seen where CBD's at almost 5,000, and we haven't inched forward since we made that first high. Okay, so it's gonna just bleed me dry now? Like, I don't understand. Like, just make a move. Like, I don't care if I lose. If I lose and I'm wrong, I don't care. I followed the plan. But at least make a fucking move, for fuck's sake, dude. Okay. We just jumped up 20 points. Can we make a continuation out of it? No, we can't.
I'm Danny Berger, and this is Bloomberg Deals. Every Wednesday at noon Eastern.
Really?
Bloomberg Television. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. Checking on shares of Circle on the day, having their best since June 2025. We're up 23% up. Results that topped expectations. Stablecoin issuer posted both profit and revenue growth, beating analyst estimates as digital asset activity really picked up late in the year. Here with more on the results, the outlook ahead of Circle CEO Jeremy Allaire. Jeremy, what's so interesting is the mood music around crypto has been pretty dire in the fiscal fourth quarter. But have people been turning and using stablecoin even more? Adoption has been growing because of this sort of volatility? People that are exiting Bitcoin and wanting to hold USDC instead?
Well, thanks for having me on. And I would sort of start by just saying, if you look at the arc of 2025 and the success of legislative initiatives like the Genius Act, the awareness around stablecoins as a key infrastructure that can be used in the financial system, in payments, in capital markets, and the incredible growth, which are obviously showing up in our full year and Q4 numbers. What we've seen in some respects is stablecoins as a technology, as a use case, decoupling from digital asset markets, or decoupling from just speculating on the price of Bitcoin or things like that. And that's something that we believe for a very long time, is that blockchains, stablecoins, and now as we see this kind of collision of this with agentic capabilities and agentic computing,
are creating utility for businesses and financial institutions and households, and that's driving this shift. And so I think the market is just starting to understand there are internet financial platform and infrastructure companies that are building for this new economic system that's built around real world money like USDC and this and blockchain technology. And then there's a different market which is certainly more speculative about digital assets more broadly.
Jeremy, that's so interesting because we've just had the news reporting that maybe Meta's back on thinking about how adoption of stablecoin is going to work within its own platform. Talk to us about how you're diversifying, because yes, you can do a lot with stablecoins and indeed putting money into US Treasury assets, but where else for the business now?
Well, a couple things. I think the first is that our core business is thriving. USDC grew 72% year on year. The amount of transactions happening in Q4 reached nearly 12 trillion. That's up around 250% year on year. Our market share has grown. We're nearly 50% of all of stablecoin transactions happening in the world, and it's spreading. Meaning it's the Intuits of the world. It's the JP.
What the actual fuck?
Visas of the world. It's payroll companies. So many companies that are there. So that is strong and growing, and we're still in early stages of that. But we see the opportunity as much larger. And so for us, to your question, we're kind of going down the stack by building operating systems for this new economic system, operating systems that can support agentic applications, broader financial applications. We're going up the stack by building applications that are useful to any financial institution that wants to plug into this and make this kind of the pipes for how they move money.
Jeremy, can you be a little bit more granular? You talked about overachievement, right, in new revenue streams. Where and how did you achieve that?
Yeah, so specifically in new revenue streams, we saw other revenue, which includes subscriptions and services revenue, includes transaction revenue. These were completely new lines of business a year ago in Q4 of 24. They grew 15x to $37 billion of revenue in the quarter, and we've also given some guidance around 2026. We see them growing, another 50%. And so this includes product and partnership work that we do to take the stablecoin network technology we have and make it available through partnerships across more and more blockchain networks. This includes transaction fees that are charged for different services that we offer. And so there's a mixture of new revenue streams in there, and we are not really yet turned on revenue from major platforms like CPN and ARC yet, but we're encouraged by that growth, and that helped our margin as well in the quarter.
All right, Jeremy, in there, Circle. Thank you very much again. Stock really pushing hard, 25% on track for its best day since June when it IPO'd last year. Coming up, we're going to have details of Paramount's improved offer for Warner Brothers as both companies actually prepare to release their earnings. A lot more to discuss. It's top time, and this is Bespoke Tech.
The city is a marvel of machinery for those who seek it. In this harmony, where precision meets wonder. Perfected in Germany. A new heartbeat. And the unrelenting quest begins anew. Never stand still.
LinkedIn Hiring Pro helps you find candidates worth 30% more likely.
The actual fuck.
It cannot help you find the right restaurant for their 1-year anniversary lunch. Post your first job today and get $100 off.
Look at it. Look at 300, man. So many buyers at 300. 96 fellow buyers.
When I visited Fernandez at IMAX's outside Toronto. We went to the facility
Yeah.
where IMAX designs
Yeah,
and maintains
yeah.
its cameras. The latest next-gen equipment is out with directors on filmed for IMAX sets, but there is still plenty of cool gear on view. As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras, you know, when we first, I'll give you a real prime example, the film cameras.
Just wow, dude.
Okay, are we building to?
Like I can't even be mad, bro. This is just the worst kind.
And that's
I mean, I've never seen a market like this in my life. I've seen small caps trade like this, but a large cap, NQ, ES, never seen a trade like this before. There's always some kind of trend, at least.
But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't.
Oh my back.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in this.
Where are these passive sellers coming from? I don't understand, dude. Every time we get a spike, getting up there, CVD's up, some kind of random selling spike that just doesn't let the continuation happen. We've been stuck in a 10-point range for over an hour and a half. Are we getting a move finally? Broke 305. Look how many buyers there are at 304, bro. Can we finally get that continuation upwards? All right, I'm setting my stop in profit 279. If I break even, I break even. I do not care. CVD is almost at 5,000 again, so I'm hoping we get some kind of fucking push upwards. We're at 310.
Question mark here. Basically, $31 is good enough to reopen those negotiations that got so intense that at midnight they were being forced to put down the phone.
Yeah, and just to be clear, the Warner Brothers board has not, called this new offer superior. It has just met the threshold for further talks.
No news Wednesday, I guess. I've never seen price action like this on a Wednesday. It's pumping. 312, 13. That's all buyers up top. Instant rejection. That is crazy. That is crazy. Yep. We just instantly reject.
For Warner Brothers, they've had some content success. I'm also a fan of A Night of the Seven Kingdoms.
Right.
But again, for both companies, we've seen cable advertising really decrease. There's still a lot of talk about how the cable
Back at 3 tons.
So, those are factors that are going to come up on both earnings calls.
312.
Going back to the actual deal part of this, there were a lot of sweetness coming from Paramount.
A lot of buyers at 310. Look at those demand. Oh, that's fake demand. That's also fake demand.
How do you see some of the nuance in the deal making?
Yeah, well, it's really interesting with Netflix.
I mean, market's just in a state of balance right now, but I've never seen a balance that small. 309, 311. Up almost 1,000 on this position. It's a band. Can we shoot higher? Can we shoot past 316? What the fuck? CBD's at 5,012. And somehow we're not shooting higher. Zero volatility in this market. Buy. Sellers at 310 now. Still overcrowded with buyers. Oh, someone just put in 100 contracts. I wonder if they're going to get filled at 310. Someone's trying to hedge this. Someone's got a wall at 340. Yeah, I'm going to get stopped out. Tapped. Down 20 bucks on the day, guys. I'm not trading this. I am not trading this. I am not trading this. I'm locking myself out for the day. No, there's no way I'm trading this. You guys want to see what the hell I'm looking at right here? Low is 70s. High is 310s. And we've been stuck in, let's see, 80, 300, 20-point range. And it's 10:30. And then now we're getting a bunch of sellers. Like, okay, yeah. You know what, guys? I may have lost an account. This one I broke even on. I don't care. I sincerely don't care. This is not a market worth trading. Call it break even for the day. Whatever. I lost $60 of my own personal money. Whatever. I could care less. This is the most ridiculous market I've ever fucking seen. But I hope you guys are not trading this, but I'll catch you tomorrow. Hopefully we get a better day. I don't know if there's news tomorrow, but we'll see. Peace.